Understanding Management Accounting, Job Costing, Part 2. This is Ken Boyd, the owner of St. Louis Test Preparation. You'll see our email address and our phone number. Our website and YouTube channel will come up at the end of the presentation. Here's our source. Principles of Accounting is some of the resources we use to create this presentation. I want to review Joe's tree service, our business we were using for cost accounting. Joe cuts down trees and other brush and shrubs. He has labor costs, salary and benefits. He has mileage of driving trucks and other equipment around. And he has a lot of repair and maintenance expense because not only must he maintain and repair saws, but he's got chainsaws, ladders, and other equipment he uses in his business. And the point when job costing becomes useful is every job is different. There's no typical job. Because of that, it's tough to plan costs. And if costs are tough to plan, it's certainly hard to figure out the price for a job to give the customer. I want to bring up a new term that's only been mentioned once or twice before: indirect costs or overhead. Here's the issue. How do I include those costs that cannot directly be tied to each job? After all, I have to account for all my own costs. Well, a word of caution: don't make finding out what those costs are too difficult. A basic rule of accounting is the benefits of having the information should always be greater than the cost of obtaining it. Here's a hint. What activities, what things going on in your business are causing the cost to occur? What's generating the cost? And can I measure whatever that activity is? What we're trying to get at is a predetermined overhead rate of how we apply these costs. One that's most typically used is labor hours. The more hours you work, the more tree jobs you're doing, the more mileage you're driving, and the more use of your equipment you have. So that sounds like a pretty good yardstick in this business, and generally labor hours is used as an overhead rate as a first choice with cost accounting, job costing. So how do we do it? How do we figure out the rate? First, we take our total overhead costs. How much in a year, for example, do we spend on the owner's time, some sort of cost for himself and his benefits, salary and benefits for the secretary, all the office costs, the cost of having the office, mortgage, utilities, property taxes, insurance, depreciation and maintenance on the vehicles and equipment. So we add all that up, and in our example, we're going to assume that's $200,000 a year annually. We're going to compare that with the total labor hours we typically incur in a year. So 52 weeks, Joe's tree service typically does 15 jobs, 6 hours per job. He estimates 4,680 direct labor hours each year. And our overhead application rate simply takes the costs in total for the year divided by labor hours for the year. We have to apply or assign about $42, $43 an hour to each job to make sure that we cover our overhead rates. What we're going to see on the Excel sheet is a job costing sheet that we use to collect all these costs. And now we get to the now what question. Well, once you know all the costs of the job, you can do two things. You can provide an accurate estimate. You can also price the work so it's profitable to you. So I'm going to reduce the size of the PowerPoint, and we're going to go over to Excel and take a look at a job costing sheet. What I've listed here is 3 jobs, 1, 2, and 3. Job 1, we're removing a stump. Job 2, we're cutting down a 30-foot tree, obviously going to be more expensive. And job 3 is going to be removing tree debris and limbs. So, different types of jobs. Moving over to the right, different number of employees required for each job and hours. Mileage, we're driving a different amount of distance. And finally, in the far right column, we're using different types of equipment and amounts of equipment. So again, every job's different. Here is the job costing sheet for just one of those jobs. And I know it's a little small, but let's try to go through it. a little more lined up here. So across the top, we've got direct labor, we've got direct material totals, really just the mileage in this case, the gasoline, and the applied overhead. Let's start at the left-hand side. The direct labor shows just for this job number 1, Bob and Jim are going to work 2 hours. We show their hourly labor rates, and it's going to cost us 4 hours. It's going to cost us $74 in labor. We're going to pay $5 for the gas. That's our direct material. And since we're working 4 hours, we're going to assign 4 hours worth of overhead. The biggest cost of our job, that's $170. So it adds up to $250 roughly. So what have we just figured out? What we've just figured out is that to do job number 1, removing the stump, based on all of our assumptions, it's going to cost $250 to do the project. Now we can go out and we can price that job to make it profitable. So that was our explanation of understanding management accounting. You can find more information on YouTube, and in fact, we can flip back to our slideshow and go to the end here. You'll find part 4 on YouTube, our YouTube channel, Ken Boyd STL, all one word. To register for live tutoring and live chat, stltest.net is our website. You'll see our email address and our phone. We'll see you next time.